The recession is cancelled. The earnings recession is cancelled. Even the miseries at JP Morgan are officially admitting it. Let me run you through the numbers, the key charts, the key facts, and then I will leave you with today's support and resistance numbers for the S&P and a little more than that. Of course, none of the following is financial advice. You know that by now, don't you? I think you come here mainly for the disclaimers. Disclaimers are wonderful, aren't they? Says former lawyer here. So let's jump straight into it. This is what JP Morgan said this morning. The large cap companies have plenty of tailwinds. That's support to play with. Weaker dollar. Weaker dollar means higher foreign earnings. Lower energy prices, trimmed costs with more fat to trim. Fat to trim are you, by the way, the employees, if you're one of those, to offset squishiness in the market. Number cuts haven't been and probably won't be too dramatic, as in earnings haven't been as terrible as we thought they'd be, at least not to the point to further encourage the bears at this juncture. So the bears have run for the hills and they're not coming back, says JP Morgan. Here is an example. Microsoft, we were expecting a 5% move. There is something called implied move, which you can understand if you understand options. We were basically told it was going to go up or down, and we pretty much thought down 5%. What did it do? Well, it went up, it went down, it went sideways. Absolutely bugger all happened, basically. It would have been a very profitable trade for those of you guys who did it. Now, where are the bears? Well, give me some examples here. IBM, top sales estimates for the fifth quarter in a row, longest streak since 2003. Does that sound like an earnings recession? Tesla stock is up 50% in the last 19 days. CVX raised their dividend by 6% and authorized an enormous, ginormous, bearalicious $75 billion buyback. SX5E, that's the European's stock exchange, index essentially, is flying into the start of 2023. So everything is wonderful, isn't it? I did some trades yesterday, which I shared with you guys. I just had one on the screen here. I thought I'd share with you. This is the sort of type of thing that we do around earnings. What do we do? Well, we sold some Johnson & Johnson options. We got $22 for each of those. I know that doesn't seem like a lot, but it adds up to about $132. And then we bought the trade back because Johnson & Johnson didn't move a lot, and we paid $12 for the buyback. So we made $120 on that trade. If you did that trade, say, every day of the year, 220 trading days of the year, you'd end up with about $26,000 profit. I'm not saying you're necessarily going to make that, but you get the idea. Small trades is where the money's at. People are always like, oh, what's the biggest trade you've ever made? Smart people don't make big trades. Now, you could, of course, make bigger trades proportionate to your portfolio, but I'm running intentionally here a small portfolio, which I share with you guys, student community. Now, more reasons to be bullish. The FOMO party has got one favorite guest missing: mutual funds. You know those bloodsuckers who take all your money in fees? Those guys are down here. They're basically short. Up here, they would be long or buyers. To put that into more plain English. So there is a lot of room to go up by, as you can see here, if they join the party. Imagine how they feel. They have to report every week to their boss and go, yeah, we missed out on the rally. Yeah, we missed out on the rally. Yes, we missed out on the rally. How much are we down by this year? Exactly. So they're going to catch on eventually. Here's a quick recap of key earnings, and I'll keep this brief. Tesla, record quarterly profits. Elon Musk was dancing naked on the table. He's very happy. AT&T added core wireless subscribers. They're going to keep spending big on 5G. IBM cut about 3,900 jobs, but good numbers otherwise. Microsoft slows sales growth indeed, and said, the cloud market would slow down, and the stock does absolutely nothing at all. So the market is kind of going into this with pretty low expectations, and therefore everything is good news. Verizon, higher revenue, guided for 2023 earnings that would be a little bit miserable. And then on the finance side, NASDAQ, and we talk about the New York Stock Exchange in a second. Let's skip that. 3M said they're going to cut 2,500 Scotch appliers and Post-it notes, stickers, and I'm expecting a bit of a sales slowdown. Boeing missed expectations, yet stock doesn't do very much. General Electric topped expectations. So it all looks pretty good. And Lockheed Martin is basically saying, woohoo, Ukraine war, right? That's a moral business to be in, isn't it? Let's go and start a war somewhere and make a lot of money, kill lots of people. Now, the New York Stock Exchange disaster, you know that little blip that made all sorts of stocks drop 25% in pre-market? Well, what was it about? Well, they found somebody, some hobbit in a data center in somewhere in the US. Their backup data center didn't flick a switch. And what is the reaction from the financial market? Well, they're all pointing fingers, like Schwab, for example, saying, well, these plans to undo the pay for order flows is a bad idea because that would bring more trading to the New York Stock Exchange where it would be transparent and open and fair. And therefore, let's use this as a way to keep screwing retail investors. So that's a nice narrative, isn't it? Bearish trades, that should say. That's a misplaced R. Bearish trades are more popular. What do I mean by that? Okay, smart money hedges when the market goes up, not when the market goes down. Inexperienced money tries to hedge when the market goes down, and hopeless money doesn't hedge at all. One of the reasons I'm teaching you guys a huge hedge move on Saturday. Join me on that at felixschwenzer.org/secret. You have to sign up. We're almost out of spaces. We had like an enormous sign up on spaces. Actually make more space for it. So I think we'll be like 2,000 people live there or something, which is going to be absolutely staggering. Links down below. If you want to get more of this kind of news, but quicker and without having to watch me, then go and sign up to our brand new spanking newsletter at tradingfloorwhispers.com. It's not exactly the same content as this because Elliot prepares it, who's one of our investment bankers, 20 years experience as a market maker, an absolute marvel of a man. But what do you need to watch out for after I'm gone in this particular video? Watch out for the jobless claims and to some extent the GDP numbers. But I actually think the jobless claims is the more important one here. And then as a takeaway, COBOL 4,100. That means resistance. Put wall 3,900, that means support. So expect us to be between 3,900 and 4,100. If you break through these, you might find the magnetism to those lines back. That's kind of how we make money. We understand how these things function. We understand how the options market is positioned and institutions are positioned and how we can make money with high probability. So our trades have an 85% probability typically of making money. None of that 50-50 guessing nonsense that most of retail traders get engaged with. That's how we are up 126% last year for 2022 on return on capital. How did we do that? Well, I'll teach it and I teach it to all of you guys if you're interested. If you want to learn directly from me and our coaching team, you need a 5, 6, 7, 8, 9 figure portfolio. Go to felixschwenzer.org/coaching, book a call with us. We're nice. We'll walk you through it and just explain it to you, quite frankly. No commitment or obligation whatsoever. Just hop on a call with us. If you're new to investing, we also have a more accessible course there, which includes live trading, 100 plus lessons and limited chat support. And it's a fantastic community. So come and join us on that front. I appreciate you tuning in. I'm sorry I can't be live with you this morning. I've got administrative madness to deal with, but it's all good. And I wish you a beautiful trading day. I'll probably pop on a little later today. So make sure you are subscribed. And if you haven't already, book a call with us and let us walk you through how we can make 2023 a much more successful financial year for you potentially. So thanks for watching. I hope to see you on the next one.